Welcome back everyone, and in this video, we're going to go over the two dividend paying stocks I just bought in my financial freedom portfolio. The total market value of this portfolio now sits at over $82,000 and it continues to grow month over month. And what I'm doing is building up a stock portfolio full of blue chip dividend paying companies that are expected to grow at a very nice pace over the long term. I am playing the long game, and hopefully over the next 2 to 3 decades, this portfolio will continue to grow, compound over the long term, and one day allow me to achieve true financial freedom with the passive dividend income that it provides. And to start off 2021, I made 2 purchases so far in this portfolio. I started one new position in a dividend paying company, and I added to one existing holding. And in today's video, I'm going to share with you the reasons why I bought these 2 companies and how I expect them to grow for many years in the future. But before we do that, I'm going to ask you to please hit that like button and subscribe. I am the Gen Z investor, and every single day we talk about the stock market, going over different stocks you can buy and sell, and discussing any major market news and headlines. And of course, on this channel, we track the growth of my personal portfolio, and I share with you every company I buy, every company I sell, and how it performs during the good and bad times. So please hit the like button, subscribe for the daily videos. And now we're going to take a look at the new company I added to this portfolio, which is ticker AVGO, Broadcom. They currently trade around $465 per share, and the company is up 51% on the 12-month chart. This has been a long-term share price grower, up more than 274% over the past 5 years. Their current market cap is $190 billion, with a current dividend yield at 3%, and they trade at a forward PE of 17.73. And I purchased 3 shares of this company for my financial freedom portfolio. And if we take a look, they sit right here, AVGO, and my purchase price was $458 per share, so a slight gain of over 1.3% since I made this initial purchase. And now if we take a look at my dividend tracking spreadsheet, the new position I started in Broadcom in those 3 shares will provide me with $43 in annual dividend income and makes up around 1.7% of the total $82,000 market value of this portfolio. And if we see any dip in Broadcom shares moving forward, I will be adding to this position and picking up a couple shares on any dip we see. So now if you're unaware what Broadcom is, they're one of the market leaders in the semiconductor industry. And the semiconductors as a whole are expected to accelerate in 2021 and beyond. And I believe Broadcom can climb much higher than where they sit today. And this company has major partnerships with some of the largest global technology leaders, including Apple. And early on in 2020, they struck a $15 billion deal to sell their parts for Apple iPhones. And this deal is expected to last over the next 3 to 4 years. And as we're seeing a growth in iPhone sales, this deal for Broadcom will be very profitable. And as of right now, the stock currently trades for around $465 per share. And if we take a look at Simply Wall Street, they actually believe this company is 20% undervalued at this current level. And a fair value estimate for their shares is at around $580. And like the great Warren Buffett has said, it is best to buy a great company at a fair price rather than a fair company at a great price. So I love getting to a solid company like Broadcom at this level where it's estimated to be 20% undervalued even after the most recent run-up that we've seen in the share price. And if we take a look at another analyst report, they currently have a buy rating on Broadcom right now, 11 strong buys, 19 buys, 8 hold, and 1 sell, 1 strong sell. Over the past 6 quarters, this company has beaten analyst expectations for earnings each and every time, and over 2022, we're expecting top-line annual revenue growth of over 21% from this high-growth tech stock. And over the next 3 years in the future, analysts are forecasting close to 32% per year annual earnings growth, which would be absolutely incredible, and I do believe will send the share price much higher than where it sits today. And now we're going to jump in to Broadcom's investor presentation to go over some financial metrics that really drew me to the company. So if we take a look, their net revenue continues to grow year over year, and from 2016 year end, where they had around 13 billion of total revenue, it now sits at close to 24 billion in the fiscal year of 2020. And this company also has some crazy high gross margins. now sitting at around 73.5%, which is absolutely incredible. Adjusted EBITDA continues to grow year over year, and one very attractive financial metric coming from Broadcom that really drew me to this business was the growth in their free cash flow. Back in 2016, they generated around $2.7 billion in total free cash flow, and that now sits at over $11.6 billion for year end 2020. That's absolutely incredible, and free cash flow is one very important metric that I always take a look at when evaluating a company, and this growth has been insane from Broadcom, and it really drew me to this stock. And of course, another very nice perspective that I like to take a look at is the 5-year dividend CAGR, which for this company is absolutely insane at over 49%. They average dividend growth over the past 5 years of 49% per year, which is absolutely insane to even imagine. This is one of the fastest dividend growth companies on the entire market, and even after a 50% run-up, they are still yielding 3% at this level, which is absolutely incredible. I love the dividend growth. It's almost unmatched against any other competitor in this space, and I do believe the company will continue to grow that dividend at a huge rate for many years in the future. It may not be at a 50% CAGR, but I do expect between 10 and 20% annual dividend growth over the next 5 to 10 years in the future. And if we take a look at that dividend right now, the current yield is at just over 3%. They pay out just over $14 per share, and their payout ratio is only 55% of their total net income, which I believe to be extremely sustainable, especially when the company generates a ton of free cash flow like we already saw. So Broadcom was the new addition to my financial freedom portfolio. The company has seen some beautiful long-term share price growth, and I think that will continue for many years in the future. I think top-line revenue is going to continue to expand over the next 5 to 10 years, and I can picture this company trading at a $400+ billion market cap over the next 5 to 10 years, more than doubling from where they are today. So I think there is still a ton of upside. I love the 3% dividend I locked in at the start that will continue to grow at a massive rate I am expecting for many years in the future. And like we saw, this currently provides me with around $43 in annual income and makes up around 1.7% of my total financial freedom portfolio, and I will add over any dips we see moving forward. And now we're gonna take a look at the second stock I bought to start out 2021. This was already an existing position in this portfolio, and I bought more of this company early on this week, and the stock is ticker AAPL, or Apple, the largest company in the world, a $2.3 trillion market cap, a leader in the tech space, and one of the best recognized brands all across the globe, and I purchased 11 more shares in my financial freedom portfolio at an average cost of $130. This company is already the largest holding in this portfolio, and I own over $14,000 of Apple stock, and my current position is up more than 31%. And if we take a look at Apple from my dividend tracking spreadsheet, by far they are my largest holding. The $14,000 of market value makes up around 17% of my total portfolio, and I feel very comfortable holding Apple at such a high level. I am a bull in this company, I always have, and I do believe I always will be, because they're innovating in such a nice way, transitioning their revenue generation model, and still bring in a ton of capital and net income, I believe, for decades in the future. So this company right now is sitting at all-time highs, but I actually got lucky and got in at a nice price. I bought in at $130 per share just by luck before they saw a nice little run up to where they are now at $139. And millions of investors from all across the world will be keeping a close eye on Apple over the next trading week because the company reports their latest earnings on January 27th, 2021. And this may be a record-breaking quarter for the business. And analysts are predicting Apple's first ever $100 billion quarter, and expectations are now coming in at around $102 billion of total revenue for the latest 3 months. And this would be absolutely insane, and Morgan Stanley has actually raised their Apple price target and are expecting a huge quarter with around $108 billion in total revenue on the business. And the new price target now sits at $152 per share, and like they said, this is a new price target set before what could be an all-time record in company earnings. I think Apple can do it. I absolutely do believe they will. I think the new iPhone is really going to bolster up their top line. And I think as the pandemic continues to grow, more people are going to be subscribing to their networks. And as a whole, I love Apple. I'm optimistic. And I would love to see the company report over $100 billion in top line revenue. But what I'm going to say is I believe that $100 billion is going to be a psychological metric for how the share price will perform. If the company reports top line revenue and it does grow year over year, but it doesn't hit that $100 billion metric, I think the share price may go down, even though the company will post a positive result. I just think that $100 billion metric is now in people's mind, and I think if they don't hit that actual number, it will be considered a downfall, even though the company still expanded year over year. But we'll see how it goes. I will definitely make a video discussing Apple's earnings report after they share on January 27th. And this company, I believe, is still a long-term play, even at this $2.3 trillion market cap, because of the new businesses that they're entering into, focus on subscriptions. A subscription model business is the future. Having that consistent revenue and cash flow coming in each and every month is where our companies and our tech leaders are trending towards. And Apple has been doing a tremendous job of doing that, and their service revenue is the fastest growing aspect of their total top line. And I think they will continue to do that as they offer new packages, offer new services, and the company already has plans to create their very own podcasting subscription service, which will directly compete with Spotify, who is already the leader in that space. But I do believe Apple and their vast network of iPhones, if they come out with a nice service, can take market leadership in the podcasting sector. And the company has just released Apple Fitness Plus for a $10 a month subscription for a fitness service connected to your Apple Watch and your iPhone. So again, they already dominate in the tech smart wearables market with the AirPods and the Apple Watch, and now they have a fitness subscription to add to the mix. So as a whole, I think Apple's new subscription models, they have so many different services and offerings on the market right now, are going to bring this company in billions of dollars every single quarter for many years in the future. And analysts still like this company. It is rated a buy, 7 strong buys, 19 buys, and 5 holds, and no one is selling out of Apple right now, and I completely understand that. Why would you sell out of the largest company in the world that has no plans of slowing down anytime soon? And like we saw the rumors of the Apple car hitting production by 2024. So if Apple actually does and actually plans to release a new vehicle and join the EV space, again, a whole new market and the potential for them to dominate is very strong. And moving forward, annual revenue for 2022 is expected to grow by 14%, which would be a massive pickup from the growth rates that we've previously seen from this business. And right now, their current dividend yield of only 0.6% is very low, but of course, we're buying this company for the share price appreciation and the long-term worth of the dividend because it does compound at a massive rate, and their 5-year dividend growth rate average is at close to 10% per year. And that dividend only makes up 20% of their total net income, so a very low, very sustainable payout ratio. Plus, Apple does a ton of share buybacks, so investors are rewarded with capital in that form. So Apple is the largest company in the world. They bring in over $300 billion in annual revenue, and I do believe this company will continue to grow for many years in the future. They are the largest holding in my financial freedom portfolio, and I have no intention of selling out of this company anytime soon. So thank you for watching, everyone. In this video, we discussed Broadcom and Apple, the two companies I purchased so far in 2021. Broadcom was a new position to this portfolio, and Apple was already my largest holding, but I continued to add to this position because I thought it was at a nice price. I plan to hold these companies for the long term, collect my dividends each and every month and every quarter, and watch those compound as time goes on and grow into larger and larger as my passive income will hopefully one day provide me with enough income to pay all my monthly bills and allow me to become truly financially independent. So thank you for watching, everyone. Please hit that like button and subscribe, and see you in tomorrow's video.